Good morning, everyone. I am Ernesto Burden, the publisher of New Hampshire Business Review, and it's my pleasure to welcome you to today's webinar, Tackling Housing and Workforce Challenges Through Impact Investing. Our webinar today is sponsored by the New Hampshire Community Loan Fund. We're going to be discussing today an innovative approach to tackling some of New Hampshire's most pressing challenges, and that approach is impact investing. So impact investing aligns investors' financial resources with their values to create positive change in their communities. It seeks to generate both financial returns while creating measurable social or environmental benefits. In the face of our state's housing and workforce crisis, impact investing offers an intriguing path forward. The New Hampshire Community Loan Fund exemplifies this potential. Since 1983, they've provided financing and support to people with low and moderate incomes, helping them to access affordable homes, quality jobs, and childcare, and ultimately to achieve financial independence. The Community Loan Fund recognizes that lack of access to credit is a major barrier to self-sufficiency. By creating a trusted mechanism for those with capital to help their neighbors, they've mobilized over $484 million in financing, leveraging over $1.1 billion in project value. The impact has been substantial. Over 11,000 affordable housing units created, more than 4,500 jobs preserved or created, and nearly 4,600 childcare spaces established or saved. All of this has been achieved without ever failing to repay an investor. Today, we'll explore impact investing with the president of New Hampshire Community Loan Fund and a panel of financial leaders whose organizations or the organizations they advise have chosen impact investing as a way of making positive change in their communities. So I'd like to welcome all of our panelists to join me on the screen as I introduce them. We'll be speaking today with Steve Saltzman, President and CEO of the New Hampshire Community Loan Fund. Give a wave, Steve. Michael Waters, Treasurer, Dartmouth Health. Welcome, Michael. Lisa Sebesta, Chartered Financial Analyst with Prime Buchholz, LLC. Hi, Lisa. And Michael Wilson, Chief Investment and Financial Officer, Senior Vice President at New Hampshire Charitable Foundation. Welcome, Michael. Thank you all for being here. Let's start with Michael Wilson, who we just introduced. Michael, you have a long history at the Charitable Foundation with impact investing, and maybe you could tell us a little bit about how that started, when it started, and give us a little history of impact investing in general.
Well, thank you, Ernesto, and thank you for having me representing New Hampshire Charitable Foundation. So the foundation was established in 1962. And we have made impact investments since 1971. We had a far-sighted visionary board at the time that said, how can we use our invested assets to have an impact in our community alongside the grants and scholarships that we make every year to support residents of the state? Those investments are meant to generate an investment return alongside some social and/or environmental return. So we started by making our first loan to historic Harrisville Incorporated to help them renovate their industrial buildings and have continued doing so ever since. A focus of a lot of that energy has been supporting topics and areas of interest like affordable housing, economic development, climate related investments, and so on. And for us, the New Hampshire Community Loan Fund has been actually an anchor investee for a long time. And really that's because of the essential work that they do to contribute not only to affordable housing, but other parts of our ecosystem. The foundation's approach to impact investing has evolved. So we continue to make investments in New Hampshire, and we also look at how we can align our other investments globally with having some type of beneficial impact on society or the environment. So that's a relatively recent change, but we continue to make the investments in New Hampshire as something that we consider key to the success of our state.
Now, there's a little bit of history that relates to the founding of the Community Loan Fund and the Charitable Foundation. And I don't know if you want to tackle that, or if Steve, maybe you want to touch on that as we dive into an overview of the Community Loan Fund's history and mission.
Sure, I'd be happy to do it because Michael is characteristically modest. We literally started in the Charitable Foundation's basement, and it was with a very small and simple a premise that there were people with resources who wanted to invest in the community, and there were problems and that needed solving in the state, and people who needed access to capital, and that we could serve as a trusted conduit to connecting those communities. And today we have 650 investors, as small as $1 million and as small as $1,000 and as large as $20 million. And what's interesting is those $1,000 investors are really important. It's the diversity of our investment that is really the strength of the Community Loan Fund. So over the course of 41 years, our work has really reflected the interests of those 650 families, businesses, and nonprofits and foundations in the state to solve the questions that they think are most pressing. And I got to tell you, at this point, everybody's telling us to focus on affordable home ownership, not just affordable housing, and also the transition to a climate sustainable economy. So that's our primary interest today.
Well, with that in mind, let's take a look at some of the folks who are doing the investing. And maybe we can start with Michael Waters from Dartmouth Health. Michael, how did you first learn about impact investing, and what made you decide to bring it to Dartmouth as an opportunity?
Yeah, thanks, Ernesto. Thank you for inviting me here today and letting me bring on Dartmouth Health's perspective and to also vocalize again our support for the New Hampshire Community Loan Fund, which we love to do. I first got involved with impact investing through my job as treasurer at Dartmouth Health, and was asked to join a group that we had formed at the hospital that was working with an organization called the Healthcare Anchor Network. And so this Healthcare Anchor Network is a group that has been established to help hospitals think about how they can use their economic power, so to speak, to promote local economies that sustain healthy communities. And they do that in areas like hiring and purchasing and also investing. So as treasurer, I was asked to join that group and think about the investing perspective. I'll be honest, I was initially very skeptical that I would be able to play a role with this group, but I was eager to learn and see what they had to offer, and it was through that group that they connected me with the New Hampshire Community Loan Fund, and they invited me to their annual meeting in 2019 in Keene, New Hampshire, which I attended, and I was blown away. I was so inspired by the leadership, by everyone that was at the organization, that all of the impact that they were having. I was literally just blown away and inspired, and left that annual meeting that night. I think it was about 8 o'clock at night, and I called my boss and I said, "You have to help me try to figure out a way to get this done. This is important. We have to try to figure out a way to get behind this."
Do you remember any one of those particular stories that really struck a chord with you during that dinner?
The foundation does a great job of balancing the fact that they are really trying to help New Hampshire homeowners and keep costs down, and also repay their investors. From my role as treasurer, using our investments to try to make an impact, getting repaid is important. And they emphasize that they've never missed a payment in their long history of doing this. They have never missed a payment back to the investor. So that's important. But what really inspired me was just how much of an impact they have throughout the state. And at the time, they were working with a resident-owned community in Keene to try to help them become a resident-owned community. And I remember that they had one of the people that lived in the community, they had sort of volunteered to try to lead this effort, and he spoke as well. And he's just a normal guy, right? And now he's trying to be the leader of a resident-owned community. And I was inspired by him too. Like he's taking the opportunity here to be a leader, and it's probably very stressful for him, but having the help of the foundation made it a lot easier. So I just everyone was really impressive in my mind.
So you brought that inspired enthusiasm back to the who's making the decision there. Who do you bring that back to, and how do they react to it?
Yeah, it takes a little bit of time for us to figure out how to present it. We had never done an impact investment, so we have an investment committee whose job is to manage our investments in a very prudent way, keep our balance sheet strong, and grow our balance sheet. So smart investment risk and investment return is our objective. We're really trying to grow the portfolio. Presenting an idea where I would, present something that was, say, below market was a new concept. So I was a little anxious about how it might be received. COVID slowed us down. Everything got delayed a little bit, but we felt like at the end of 2020, it was just the right time to bring it to the organization, because it just makes all the sense in the world. This foundation, being so strong, never missing a payment, but also housing is really affecting us as an organization, Dartmouth Health, in two ways. One, most importantly, we know that housing is one of the most important social determinants of health. Having a secure housing environment is definitely a leading factor in your overall health. And so that affects our patients, which is the most important thing, but also affects our employees. Affordable housing is a crisis for us, and finding workers is really difficult. So we can't do our mission without workers. And so it really lined up well. Their mission, our mission, it's really had a nice alignment there. And our committee they felt my enthusiasm, and they got enthusiastic too. They were fully supportive of it. They couldn't have been more happy to make the initial $3 million investment that we made. So it was very well received. And then we as an organization have really tried to put it out there that we made this investment. So our public relations team has been, put out press releases and things like that. So I would say just generally across the organization, a lot of enthusiasm for making this investment, which was great.
That's fantastic. Thank you. I kind of want to take the same topic to Lisa. Lisa, can you tell us a little bit about what Prime Buchholz does and who you work with, and specifically those folks that you work with? Why are they choosing this path?
Sure. Yeah. So we are an investment advisory firm. We're based in Portsmouth. We have just over about 140 employees, most of whom are in Portsmouth. We have a small Boston office as well, but we've been in business for about 35 years. The vast majority of our clients, about 85%, are nonprofits. So these can be endowments, foundations, often universities or other independent schools, private foundations, healthcare foundations. And so all of them, all in that bucket, really have a mission to their organization. And in many cases, they ask us to also think about using their endowment dollars for the better good. Because we're located in Portsmouth, with 35 years of history here, we have several clients. Many of our clients are actually New England focused or New England based. I'll just say one thing before I get back to that. Before I joined Prime Buchholz earlier this year, but before I joined them, I actually was a practitioner in the space, and I had co-managed a small impact investment fund. And it was the community loan fund that actually facilitated peer group networking events as one of the larger, impact investors in the region. And they would gather folks like myself from, all over New England, and really to share best practices and share ideas. So I just really wanted to lift that up as and when I came to Prime Buchholz, I was delighted to see that the loan fund was on our platform of approved funds for our clients. So when we think about how we invest our clients' money, we're investing it across all kinds of different asset classes, so stocks, bonds, some alternative investments, and because of our, client base have many of whom have this mission orientation, they have asked us for, impact investments. And again, the idea being with that word impact is that there is an intentionality around having some positive social or environmental impact on the community. So we have several New Hampshire-based clients that have invested in the community loan fund and have been very happy. They've been very happy, and we've been very happy with the results that we've seen, particularly around the impact.
Is the the mission aligned investment concept, is that something that's become more important? It certainly feels like it's something that's become more visible in the media to me in the past 10 years, both who people are investing with and who people are, or who constituencies are wishing that people weren't invested with, in terms of, so is that something that's growing not only amongst nonprofits, but maybe generally?
I do think it has. There's definitely some data out there that show that the number of dollars that have been moving towards what are considered socially responsible or mission-related investments has grown. There's a nonprofit called USCIF that's based out of Washington, D.C. that collects that data and publishes it annually. So there clearly has been some underlying trends. It has been, the idea of socially responsible investing goes back, many decades. And it definitely has evolved over time from earlier in my career, we used to screen out stocks that had or companies that had some negative business activities, such as it might be firearms or tobacco, or depending on what that individual client's mission was, that they didn't want to support those companies. And then you might be familiar with the term ESG, which is environmental, social, and governance. And we saw more clients trying to incorporate those factors into how they evaluate either individual funds or companies that they were investing in. And it's really kind of evolved into this space called impact investing, which has, again, much more of this very intentional focus around having good, and then also holding ourselves accountable for what we've done in the community and reporting on it. That's a really important piece too, is not just the financial returns, but also to be able to talk to and lift up what's been going on in the community and how these dollars have made a difference.
That does seem important for both the companies that are doing it, but also even perhaps for their employees or their potential employees. I know we've seen a lot of reporting over the past couple of years about newer employees entering the workforce who care very much about aligning with the values of the companies that they're joining. And this seems like a tangible way to do that. Is that something, and maybe I throw this question out to everybody, is that something that you see as a potential value to choosing impact investing is actually as a human resources or recruitment tool? Steve.
Ernest.
Go ahead, Michael.
Okay.
Well, I'm just happy to chime in with our experience at the foundation. So we work with generous donors who want to support communities in and around New Hampshire. And when donors come to New Hampshire Charitable Foundation, if they wish those assets to be invested, they'll choose an investment option. And so historically, it would go into what people think of as an endowment. And as Michael pointed out, for Dartmouth Health, focused on maximizing the risk-adjusted return in a prudent way. But we also have an option for donors who are interested in impact, whether it's globally or locally here in New Hampshire. And 12 years ago, that investment option had $200,000 in it. And today it has over $50 million through donors selecting that as an expression of alignment with their values. And I think that's, I think that's an interesting data point. to illustrate the trend of a greater desire amongst not just younger generations, but people generally to be involved in this type of investing.
And just to put a point on what Michael's been describing, I think for the community loan fund, we have to be really relevant to people, or people don't want to come work here and investors don't want to put their dollars with us. Michael Waters described our resident communities work, and I want to talk about that for just a second. We got our start 41 years ago because there was a manufactured housing park in Meredith, New Hampshire. And the owner of the park was elderly and was going to sell it to a hotel developer. And while they were called mobile homes, everybody knows they're not particularly mobile. So we organized those 13 residents into a cooperative so they could buy the park. And it was a recognition, even if you own your home, if you don't own the land under your home, you're insecure. And the same way that Michael described the incredible excitement when people form a cooperative and run a real estate corporation, we've seen that now magnified. Well, we've now organized 151 cooperatives in the state of New Hampshire. So more than a third of the manufactured housing parks in New Hampshire are owned by the residents. And while that may sound abstract, that's where the person who delivers your mail lives. That's where your school teacher lives. That may be where your grandparent on Social Security lives. And one of the other things that we discovered is that while we have been organizing cooperatives for 20 years, we learned that many of the people were caught in predatory mortgages when they tried to buy their homes. That they were typically financed like chattel property, like you would a jet ski, at very high interest rates. So we created what may have been, we think, the first 30-year fixed rate mortgage for people to buy manufactured homes. So we know that creating financial stability is not only the greatest thing you can do to create multi-generational wealth, but it also helps stabilize communities. We can't change the macro economy, but we can make the economy work for more people by providing responsible finance. The same reason that we do childcare work. Show me a working family that hasn't tried to find, how to care for their children when they're at work. So that's really why I think people continue to invest in us and why people want to keep working here, is they get to see the tangible results of their work. And there's a lot of pride associated with that.
Do you have a sense of why that was, that you couldn't get a 30-year fixed mortgage to buy a manufactured home and a piece of property to put it on?
Sure, because it's for two reasons. One is there were very anachronistic notions about the value of manufactured housing. If you look at the last 5 years, manufactured housing has actually appreciated faster in value than stick-built homes. But a lot of the people that make financial decisions don't have any experience with manufactured housing. They don't live there. Their mothers don't live there. There's the kids who, the young person who teaches their kids school doesn't live there. So a lot of it was just a stigma. And I think what you've seen through our work is that the stigma was not only incorrect, but it was also really bad for policy. That we have not only have we not had a co-op default, like our mortgages, half of our median credit score for our mortgages is a 620. What most people consider that are not good borrowers. Our default rate is the same as it is above 620. And it's a very low default rate. And one of the reasons why is we offer a 0% homeowners assistance loans for people with low credit scores to provide down payment assistance and closing costs. They don't pay on it through the duration. When they sell their homes, then they pay us back. But the difference is it's allowed people who otherwise couldn't afford to buy a home, who couldn't get a 20% down payment. They become very solid borrowers. They become great members of their community. And it's every social science study says the same thing. When home ownership rates rise in the community, everybody benefits. Kids do better in school, fewer people get divorced, crime goes down. So we've seen a lot of positive support for this program, not just from people who have relatives living in manufactured housing or live in manufactured housing themselves, but gosh darn, every mayor in the state that has a resident-owned community really understands the value, of when the residents own the land under their homes.
Lisa, you said that your clients, many of your clients have a New Hampshire focus
Mhm.
and a focus around place. And is some of that focus around place, directed towards housing in particular?
Yes, we've definitely seen, not just in New Hampshire, but among clients in other areas as well, that affordable housing and affordable homeownership, as Steve mentioned, has really become a much more important issue for impact investors, because I think because housing has become just less and less affordable in many places. So, the good work that the New Hampshire Community Loan Fund has been doing for a long time is definitely, a very attractive impact investment opportunity. I think that housing is probably one of the top impact issues. So when we have clients who express an interest in impact investing, affordable housing is usually at the top of the list of the issues that they want to support.
Well, and I think, you would have to not be looking at the news at all in New Hampshire to not understand that the degree to which housing has become a crisis, but also has begun to drive a workforce crisis also. And so I wonder if any of you want to comment on, particularly maybe actually Michael on how your organizations look at that as something that directly impacts them.
Sure. I'll start. I mean, it's a real crisis is the right word. I think about what Steve was just saying about who lives in the resident-owned communities, and it's a similar feeling that we have at Dartmouth Health. The patients that we take care of, they're often not strangers, right? They're family members, they're friends, they're neighbors, they're people we know. It's a small state, and it doesn't have a lot of people in it. But where the workforce housing or the affordability issue it's really coming to a head is that we're a state of scarce resources, and I think people is perhaps our most scarce resource, and so it's really important that we have affordable housing, because if we don't, people either will leave if they're already here to go somewhere where it is more affordable, or they just won't come, and that worker drain has real impacts. We all see it in places, right? Like when we go out, restaurants and things like that. We've all seen it over the last few years, but it's happening in healthcare. It's becoming very, very challenging to staff our entire organization across the board. And there remains very high demand for our services. So we need people to stay here, and we need people to come here, and getting housing more affordable, I think, is a key element of that process.
Michael Wilson, let's get into a little bit of the nuts and bolts of investing in general. During our prep calls, one of the things that came up was a laddering investment strategy. And I think this would be a great way to turn to the sort of nuts and bolts of how people could and should approach impact investing. And I also want to take this transition moment to remind the audience the Q&A is down there for you to type into. So if you have questions for any of our speakers today, please feel free to ask away. I imagine one of the most pressing ones would be, well, how do I get into this? And so we're about to get into that, but feel free to chime in with your questions and I'll share them with our speakers as we move along. So sorry, Michael, I asked you a question and then talked for 5 minutes.
That's great. Yeah, so I think I'll answer this from sort of two directions. So one is similar to Lisa's organization and Michael's. We are an organization that has pools of investable capital, or we work with clients who have pools of investable capital. So if viewers are in that cadre of investors, I think from the nuts and bolts perspective, I would encourage people to think about the diversification benefits of these investments. As Steve mentioned, there's a bit of an anachronistic view that these are high-risk investments. Generally, they tend not to be. And I'll give examples. These are generally debt instruments or loans that are being made. And in periods of crisis like 2008, or when you see the bond markets declining significantly in 2022, we saw no impairments or challenges from our impact investments. And so as an investor, I think it's worth bearing in mind the diversification benefits of impact investing alongside all the good things that we've spoken about. So that's coming at it from the perspective if you have a pool of capital like that to invest. If you're coming at it from a perspective, whether it's individual, family, or corporation, the way I would encourage people to think about it is if you have available cash, for instance, or you have long duration capital that you can invest, these are great opportunities to use that capital to have a positive benefit on our communities as well as generate an investment return. If you're a little worried about liquidity, because these investments do need to be patient in most cases, these aren't investments that you invest on day one and have the option to get it back on day two, because mortgages, they don't really work like that. And there are some products that can help you, but in the main, you need to be a patient investor. So how do you overcome that if you have personal or corporate capital that may be available? What you could do is think about, in terms of, let's say, cash available, how much do we think is not needed in a year or 2 years? And then break up that amount of capital into laddered investments, which we've done with the New Hampshire Community Loan Fund. We've done both long duration investments out of our investment pools, and then we've taken cash and made 1-year commitments that mature on a rolling basis. So basically 4 equal investments, and those investments are maturing every quarter. So we do have some access to capital in case we need that liquidity. An organization like the loan fund or others would have some stability in the capital that they can lend out. And it gives, I think it can be a win-win for both the investors and the investees. I would encourage people to look at the balance sheet differently and creatively. Not too creatively, of course, but with an eye on how you can use it to have that double bottom line.
Lisa, is there something, maybe to piggyback on what Michael was saying, is there a strategy that you advise your clients as they're approaching this kind of investing?
Usually it is part of a broader, asset allocation and diversification strategy. I really wanted to reiterate what Michael said about, the protection that these kinds of investments can provide, particularly in a crisis environment. It's very comforting to have this sort of steady Eddie investment that is very predictable in terms of its cash flow and returns. So that is definitely something, along with the impact, that's a very strong consideration for making an investment in something like the Community Loan Fund. And for us, most of our clients have used this as a long-term allocation. But we do also have, some, to kind of Michael's point about the laddering, we do have a couple clients who use that approach, but most of them are sort of kind of almost like set it and forget it, but very happy to see the annual reporting on the impact and as well as the returns.
Very good. Steve, we have a question from the audience that I think I'll direct to you. Is the Community Loan Fund financing housing other than the resident-owned manufacturing housing communities?
Yeah, I would love to answer that, but I also want to follow up on something Lisa said, set it and forget it. I can't dramatize how important some of the prime Buchholz clients really are for us. That if you look at the rates that we pay our investors, it's relatively flat over the last 20 years. We always pay people 2.5% to 3% on the investments that they make to us. But that means when interest rates are really low, we look like a really high return investment. And where interest rates now are really high, we're lower than market. So some of these investors that have a long-term perspective are really critical to us being able to make sure that the rates that we offer our borrowers are low. We can't pay an investor 7% because then we have to charge our borrowers, interest rates that they just can't afford. If you think about New Hampshire today, the average income for a family is around 63,000, and the average home price is over 500,000. That math just doesn't work. So and at this point with prices going so high, we sort of need investors more than ever that are willing to sort of invest, long term with us. To the question of do we invest in housing, other manufactured housing, we do. We do invest in some multifamily housing, and what we try to do is there are so many good multifamily lenders out there in the community, so we try to look for gaps. Where a project may have maybe $1 million off, or there may be 500,000 off because the costs are higher than value. So is there a way that we can make a loan but for us, the project doesn't go forward? So we've done some low income housing that way, but we think that market is very well served in general. Manufactured housing, we're the biggest manufactured housing lender in the country. That is lending to low income people, and we're the ones who invented resident communities. And it is in terms of, but for us, and when I say us, that means our investors as well as the community loan fund. It's just a market that isn't getting served. So we try to do that we think is the highest mission, and the most urgent for the community.
So you said largest lender in the country for this, and this I think is something that's remarkable to sort of pull out statistically, given what a small state New Hampshire is. That you are really, the New Hampshire Community Loan Fund is one of the largest of its type overall in the country. And how many are we, of organizations that are doing what you do? How many are there, and where do you sort of rank within those in terms of the scope of your investments and lending?
Yeah, I don't want to do any exact numbers, but there are about 1,500 community development financial institutions in the country, nonprofit loan funds. There are CDFI banks, CDFI credit unions, and CDFI loan funds, of which we are. And we're probably in we're not in the top 10 in terms of the largest, but we're probably in that next sort of quadrant of 11 to 30, in the country. And I think we don't always view our impact in terms of size. We wanted to prove two things. We wanted to prove that people living in manufactured housing parks could organize co-ops, buy their parks, and run a corporation, which manufactured housing parks are, successfully. And, we don't have to lend everywhere in the country, but we want to try to innovate here and have people duplicated elsewhere. So we spun off a national nonprofit that does resident communities around the country. And they've done roughly as many co-ops around the country as we've done in New Hampshire. So, we want to be the thought leaders of the country, and we don't necessarily have to be the biggest in town. Success to us is actually, we would love it if we never had to make another manufactured housing loan again in our history. We could focus on childcare and climate and farm and food because other people are doing it. And in fact, when we lend to resident communities, a lot of New Hampshire banks will lend alongside us, and we'll give them the senior part of the loan, and we'll sort of take some of the riskier parts of the loan. One thing we've done since 2012 is that we've done over 500,000 hours of coaching for our borrowers, whether it's how to organize and run a cooperative, whether it's how to right size a loan and how to get a mortgage. So, when a borrower comes to us to buy a home and they're not ready today, it doesn't mean that the second or third time they won't be ready. And I think that's really a commitment that we have. And for people who want to get involved with us, I'll just sort of mention this. There are really three ways for people to work with the Community Loan Fund. One is as an investor, either working through the Charitable Foundation, Prime Buchholz, or just coming to us directly. They can also make a donation. But I'd say for people that are interested in policy in the state, whether it's childcare, whether it's about climate, or whether it's about housing policy, reach out to me and reach out to us. And we'll be happy to go down to the Capitol and to the general court with you and help you lend your voice alongside ours.
Talk a little bit more about that. What's that part of your mission about in terms of advocacy?
Yeah, we're a nonpartisan organization, both by our corporate status as a 501(c), but also we have to represent everybody in the state. And even if you said we were 100 times bigger than we are now, and we're pretty large, we still wouldn't be able to do enough lending to have the impact that we want. So we want to use our lending as a laboratory for policy work, both within New Hampshire as well as in the federal government. So we use our mortgage data and we share it with HUD in Washington, D.C., so that they can understand that lending to people with low credit scores to buy manufactured homes is actually a darn good investment. And that these resident-owned communities, because we've done 151 of them over 41 years, and not a single one has failed, that the federal government and whether it's Fannie Mae and Freddie Mac should lend support to the residents to help provide them access to capital. So, again, we want to be market makers. One of the challenges that we have now is that the land in manufactured housing parks is so incredibly valuable. A lot of outside money is coming into the state because people realize if you buy a manufactured housing park, you can just raise the lot rents as much as you want. And, if people have to move out because buying a stick-built home is so expensive, there's an unlimited number of people that'll pay a really high lot rent. Or people just decide, we're going to buy the manufactured housing park, kick everybody out and build a hotel. That there can be, more valuable uses. But if you think right now, we have a park that we're working with in one part of the state that has 157 homes. 157 families live there. And it's now up for sale for $15 million. Well, if the residents sort of organize and they use what is now market rate loans, they'll end up paying $900 a month for their lot rents. For people that are making $48,000 a year, that's an impossible number for them. So for someone like us, working with a lot of our partners and impact investors that are willing to maybe make us a loan at a 2 or 3%, it's going to allow us to offer a much lower loan to the co-op to buy that park. So sometimes, we try to do good things in the community, and sometimes we just want to save people's homes. But again, we want to use our lending as a laboratory for policy work, in the state. And I think what's good is that support for manufactured housing doesn't fall along party lines. People understand that the person who's caring for their aging parents lives in manufactured housing parks. That school teacher who's buying their first home lives in that park. So, we have a lot of support, and our job is to share our data and our stories down at the Capitol in Concord.
Yeah, I think Michael Waters, you had mentioned earlier, or it might have been in our preparation call, and I'm conflating those two moments. But you had mentioned that that's really the way that Dartmouth is looking at its investments here, as investments in not only your patients, but the staff that you have are very well benefiting from having this opportunity.
Yeah, absolutely, 100%. And I think it's sort of in line with what Lisa was talking about before. And I think the way we think about these investments is like any other investment. What's your objective, right? If you invest in an equity market, you're going to expect higher returns over a longer time, and you're going to expect a lot of volatility. And so that's how you sort of judge how you're doing with that investment. With this investment, there's two aspects of it. Are we getting the interest that we were promised? Yes. And is it having an impact? And so when we do a report on our community loan fund investment, the investment return is easy. Did we get it? Yes. And then we spend most of the time talking about what they've actually done in the last year. And we talk about the homes they've saved and the new communities that are under threat, and the people that have had to leave because they weren't able to convert a community. And so we measure it both ways. So we're telling our investment committee, look at the work that got done, which is really important, and it helps solidify what we want to do here, and it's one of the reasons why we initially made a $3 million investment in 2020. We increased it to $5 million a couple of years ago, and we did that very intentionally. We looked at that what they were doing and said, this is really important work. The higher rate market is making it harder, and so our investment is more valuable. So let's increase it, but let's also we looked at it and said, we are the largest private employer in the state of New Hampshire, and we said let's set out an example for other people that might be thinking about an investor in this community loan fund. Let's be the largest New Hampshire investor in the fund. So we intentionally got to that $5 million level. I think we're a smidge above Michael Wilson and the foundation, but really wanted to be intentional with setting that example about that this is really great, important work that they're doing, and others should think about doing it as well.
One of the things you mentioned there is you report on what the financial return is, but then you have to report on what the impact has been. And I think that brings up an interesting question about this, which is if you're an organization that's invested in the community loan fund and in impact investing in general, you're looking for both kinds of return. How do you measure the impact of some of these projects, and how do you sort of quantify that? Maybe as an employer in the region, if you're taking part of your return as having more workforce housing in your community, what kind of reporting goes into developing a really good answer for that? Is that, I imagine, Steve, that's something that you guys work really hard on, is to try and quantify that.
Yeah, we really do. I mean, we count a number of things that are both quantitative but also qualitative. And and part of it is positive impact, and some of it is also preservation. One of the things that people in community development say when the cameras aren't on is that meaningful community development takes a minimum of 10 years. So one of the things that we're doing right now is investing heavily, with a lot of parties to improve the infrastructure and manufactured housing parks. We're working with a manufactured housing park in Berlin, New Hampshire, with 24 homes. We're replacing every home that has a underground propane tank. We're giving a heat pump to. Every home is getting weatherized, and then we're going to do community solar. I mean, just a comprehensive sort of model about how you build a community up for the future. And many other communities, it's a matter of improving their water lines. How do we get all that sort of resilience in there? And I think if we were just looking at people with financial returns, they wouldn't care about that stuff. But again, if you're the Charitable Foundation, if you're Dartmouth Hitchcock, those sort of long-term investments in community mean a heck of a lot more. And so they understand why we're doing some of these things that aren't always related to a mortgage.
I'll just piggyback a little bit on what Steve was just saying, because I know for our clients, definitely the numbers are important in terms of, numbers that have gone into, to various mortgages, but also those stories are what I think have, they resonate very deeply, particularly with our investors, because they're doing this for a mission related reason. And so yes, it's important to hold ourselves accountable and say, okay, we did what we said. The loan fund did what they said they were going to do, but also then let's look how it actually impacted the community and the stories that come out of that. I think that's a really powerful tool that our investors really appreciate.
Excellent. Well, so taking as we draw near the top of the hour, wanted to sort of hear from each of you, looking ahead. How do you see impact investing shaping the future of New Hampshire's economy and communities? And this is a sort of open-ended question. Feel free to tackle that any way you want, but maybe start with Michael Waters.
So could you repeat the question for me?
So just looking ahead, how do you see impact investing shaping the future of New Hampshire's economy and its communities? And that can really be, should especially be from your perspective there at Dartmouth.
Yeah, I think there's all kinds of opportunity. And the community loan fund helped us think about that, right? Like, so we make this initial investment, it goes very well. They're doing all this good work, and it has to start to think about, other ways that we can, impact our local communities. Because for us, that's what we really want to do. We want this to be a local impact. And so, like on the issue of housing, there's the work that the community loan fund is doing, but we actually created separate from the community loan fund. We worked with other people in the housing areas to create a loan fund that helps create affordable apartment units. So we worked with a nonprofit developer out of Burlington and a local bank to kind of figure out how could we create this fund and help it drive more affordable units for apartments. And we ended up getting $9 million invested in that fund. Three from us. The Dartmouth College was a big investor. Three from them as well. $3 million. Muskoma Bank put in $2 million. Lots of other local areas, King Arthur Baking, the co-op, lots of the Hypertherm, lots of the local entities up there, put money into this fund. And we think that fund is going to end up helping create 260 affordable apartments in the region. We think that sort of model can be replicated. So we're trying to figure out, can we create a similar kind of fund in the Keene area where there's similar housing issues? Can we find local businesses that are willing to put some money into a fund to have that kind of impact? But we also think that this model of working with a mission-driven organization like we are, has sector expertise or whatever issue you're dealing with, and then also oftentimes combining with like a local development fund or a local bank to bring their expertise in. You can leverage a lot. I think there's opportunities beyond what we're already doing to really create an impact in the local communities.
Thank you. How about you, Michael Wilson?
Yeah, I think Michael's answer, that's great to hear. And I think what's been interesting to observe in the impact investing space is how many new quote unquote products are coming to market, more sort of nationally and globally. But I think that's reflective of the sort of flywheel effect here, which is if you have organizations that can prove this concept works and that the investors get repaid, we'll put the usual caveat in all investments incorporate some form of risk, so keep that in mind. But as you have a flywheel effect of organizations proving out that these types of investments can work, institutions invest in them, get paid, and say this works, the opportunities expand. And so as we've seen products expand elsewhere, we've also seen opportunities increase here. We tend to be quite responsive in nature. So as opportunities come to us, we evaluate them. And when we started in this sort of amplifying our local investing, we didn't know what the portfolio would look like. We just wanted to see what those investments may look like over time. So we've invested in fisheries permit acquisition, solar, economic development, food co-ops, things like that. But 2/3 of our investments have ended up being in affordable housing. So I think it's a good signal of what's needed in the communities that we're serving. I think it's a good indication of what the future holds for us and the types of things that Michael's talking about in terms of not only being responsive, but being proactive in providing solutions, as well as what Steve was talking about. I think that's great to see tools being built to help support the ecosystem, and feels to me as though it will continue to grow, and the more people we can get to accompany us on this journey, the more benefit we'll see in New Hampshire.
Thank you. And Lisa, Prime Buchholz, perspective on that.
Sure. I think Michael Wilson hit the nail on the head with the flywheel analogy. And I'll also go back to my prior experience, as I said, as a practitioner, knowing for us, as we were approaching potential investors, whether we were being coached or, by the community loan fund, or potentially even partnering with them, as part of the kind of the overall loan package, or for a particular company, it just added a lot of legitimacy to us having, you know, a well-established CDFI that's been successful and operating in the region for as long as it has been. So I do think that just by virtue of doing as well as it has, it's really been able to kind of, as Michael said, build out this ecosystem so that additional funds, impact funds with a regional or even state-based focus can, you know, can talk about, hey, you know, we're trying to do the same thing, or we're kind of expanding a little bit. Maybe I was actually, when I was working for in focusing on food and farming businesses. But again, I just think it's building that ecosystem really helps legitimize the entire movement.
Thank you. So let's go to Steve for to back clean up here, so to speak. The you know, what people who've been on the call today, maybe they've become inspired, they want to get involved, they want to get their company involved, or maybe they want to get involved as individuals. You've mentioned that the initial investment can be as little as $1,000 and as short of a period of time as a year. Maybe tell people what they can do. What do they do next after they get off this call?
Yeah, I think they should just reach out to us. Let's talk. Let's get a dialogue going. I mean, it's of the 1,500 CDFIs, almost all of them get most of their money from large banks. So when interest rates go up, their rates go up. And I would argue what we've seen is that almost to intolerable rates. I think we in New Hampshire are really the envy of most community loan funds in the United States because of the prime Buchholz clients, you know, Dartmouth Hitchcock Charitable Foundation. We've been able to keep our rates low during this high rate environment. If you look at the challenges in New Hampshire, it's probably more acute than it's been at any time in our 41-year history. If we're going to rise to the challenge, we're going to need more capital, meaning more investors like our partners and our panelists today. So, you know, I invite people just to reach out to us, and let's find a good way to work together. And I really appreciate all of the investors as well as the panelists who have stood by us during these challenging last 3 years, because I believe the next 2 or 3 years are probably going to be even more challenging for people that make less than $70,000 a year. And we're going to have to do what we've done in the past, get people in the community to reach out and support them. And I just got to say, it's kind of a remarkable thing that some of what Dartmouth Hitchcock and what, you know, Prime Buchholz clients do, they're investing money to help people that they've never met, whose names they'll never know. I mean, that's such a New Hampshire thing, and I think it's just incredibly special. I think of them the same way I do all the search and rescue people that go up to Mount Washington during the worst storm of the year, you know, to save people that find themselves in over their heads. So I'm really grateful for all the people that have stood by us.
Steve, that is a beautiful sentiment to conclude on. And I want to thank you all, Michael, Lisa, and Steve for joining us today. Thank you to the New Hampshire Community Loan Fund for sponsoring the webinar. And thank you, our audience, for attending today. We truly appreciate you. I'm Ernesto Burton. I'm the publisher of New Hampshire Business Review. It's been my pleasure and honor to host today. And wish you all wonderful rest of the day and a great weekend soon. See you later.
Yeah, everyone.